They built a glass paradise way too high, then the bubble pop. The silent sound of foreclosure signs are all over town. I got a bad loan, a promise they believe. Now the dream is over, they're feeling deceived. I watch from the sidelines, patient and cool, playing by a different set of rules. All I wanna do is, and I wanna do is let the fun go. All I wanna do is, and I'll cash up hard and watch the funds grow. This is straight up capitalism, chick, chick, boom. Sweeping up the pieces with the concrete boom. Wanna do, wanna do, wanna do. Get a call from my contact, a whisper on the phone. Another empty unit, the speculator is gone. He says a shame with a crocodile tear as he sells me their future for a fraction of last year. The paperwork's easy, a cash only deal. That heartbreak and panic is my next big steal. They get a cardboard box, I get the ocean view. It's nothing personal, it's just what I do. And a casual body, take your condo. And a casual body, and watch the dance floor. This is straight up capitalism, chick, chick, boom. Sweeping up the pieces with the concrete broom. When I do wrong, when I do wrong, when I do. Some myself ask for a quick return. Some I rent out, let the lesson burn. They call it a crisis, I call it a sale. In this concrete jungle, the strongest prevail. No funny business, I am the business. They sold you a lead, now I'm the witness. Seek your condo.
Happy Thursday, Miami. This is Condo Capitalism, a conversation about what's going on in the condo market in the Tri-County, South Florida area of Miami-Dade, Broward, Palm Beach County. We're fortunate enough today to have a veteran banker who's going to be talking about mortgage rates. I don't know if you guys have seen, but basically we got a little bit of a pissing match going on in Iran with the United States and Israel against Iran. You know what's happening? Oil prices are going up, and you know what that means? That means the cost of your loan, your mortgage, your credit cards, everything's going up. And we got just a guy to walk us through it, to help us understand exactly what it means. Should you go in and get that mortgage today? Should you wait? Should you refinance? Should you sit on the sidelines? What should you do? We got just a guy. He will lay it all out for us. The gentleman's name is Sergio Aleaga. He, for the last 25 years, has been the president of Union Mortgage Investment Group over in Coral Gables. If you want to check out his website, go to unionmtg.net. So unionmtg.net. Prior to that, Sergio was also a pilot. Sergio, how's it going? You're the pilot. Fly us through this chaos that's going on right now. It's been going on for 10 days since the United States launched an attack with Israel against Iran. Who would have thought your home mortgage prices would be going up all because of a pissing match going on over in the Middle East in the Straits of Hormuz, which nobody knew where it was up until about 10 days ago?
Absolutely, absolutely. Listen, we are in a very, very a territory that nobody has been before. Okay, mortgage rates they're going up. Today they climbed 3 times to be exact. As you know, oil is up to $8.89, up $1 since 5 minutes ago. So it keeps going up, but for a total of 96.14. We get a repricing from one of our lenders. We get every time that rates change, we get an email indicating what the new rate is. So it's very for the consumer, it's very confusing because the consumer does not follow the market like we do. So it's our job to let them know specifically, especially people that are in the market to buy, people that are getting approved. And let's say they got approved with a 6% rate of 5.75. Now the rate goes up to 6.5, and they're no longer approved for the amount that they wanted. So it's double the work. We're in the trenches here, trying to guide them as to what to look for when searching for properties. And the way we do business at Union is that we look at the market every day. We find the right price for the consumer. Obviously, the consumer has the option to float with the market. But right now, I think the best thing to do is if you have a contract, lock the rate. This is no time to gamble with your rate because everything is changing on a daily basis. And that can work the opposite way as well. If things better or worse, that things change very rapidly. We're in a constant, today has been, like I said, 3 repricings. And we have to call people that are ready to sign applications that maybe don't qualify for the property that they have a contract on. Now they need to come up with more down payment. Now we need to buy down the rate to be able to qualify. So it's a lot of uncertainty right now for this folks, and we need to be clear and transparent as to what's going on with them. Because what happens is, if you let that go, if you don't make that phone call, they get into a transaction that it might never close. So when you get into a contract, you do an appraisal, you do an inspection, that money might be lost if they don't qualify for the loan. Or if they don't have enough money to put more down payment to bring that payment down and qualify with the proper ratios of qualification. So I think the consumer, people have to sell, people have to buy, as you know, especially specifically in condos. You know, the inventory is going higher and higher and higher, and the prices are going lower. Obviously, there's some big discounts on condominiums, and I see that as single families as well. Here in Condos, I see people are starting to negotiate the price down on single families. I have one today that they were asking 1.675. They're down to 1.5. And I think they're going to sign a contract now. I just sent the numbers, the new numbers with the new rates, and I haven't heard back yet. So let's see how that works out. So it's constant. The mortgage business, it changes constantly, especially when things, events like the ones we're going through happen. War, it's not a joke. It's real. Things are changing on that end. On an hour-to-hour basis as well. So they send troops on the ground, for example. This means extended issues with the pain, and that might mean higher rates for a longer time.
Yeah. Sergio, I'm gonna want to ask you some other stuff, but I want people to stick around for a while. So I'm not going to ask you the real important question, like, does this remind you of 2007? Does this remind you of 2008? So I'm not asking you that yet. But I want to kind of whet everybody's beak and have them wonder what exactly Sergio's going to say. A gentleman who's been a lender for 35 years, 25 years with Union Mortgage. Remember, everybody, check out his website, unionmtg.net. Sergio, tell us a little bit about yourself first and foremost, maybe for people who haven't seen you before on some of our podcasts, because you've been on before. Can you just kind of give us the elevator pitch about you, how you got into banking, and sort of your overall perspective about, residential real estate, and maybe any kind of commercial lending you do as well?
Sure. We have in my career, I grew up in New York. I went to I came to the United States when I was 5 years old. Then I went to New York. By the time I turned 18, my parents sent me back to Ecuador. So I grew up in went to a Catholic university in Ecuador. And at the same time, I became a commercial pilot. And I was working as a pilot for 3 years. I decided to come back home because this is home for me in the United States. When I came back, I went directly into a bank. Back then, the savings and loan, I went through the savings and loan.
S&L.
I'm very familiar with crises. You know, and I've gone through that, to the attrition of all of banks, banks buying banks, commercial banks buying savings and loans disappeared, and I was left working for a commercial bank.
Sergio, if I can interrupt,
sure.
Just to give people context. So savings and loan back in the day, that's what they did. They lent on residential, correct?
That's correct. Residential lending, 20% down, and it was a 5-year fixed. There were no
5-year
term
fixed.
mortgages.
Now, true or false, the famous holiday movie called Wonderful Life, that's actually a savings and loan, and it actually shows a run on the bank when everybody's trying to pull out their deposits. And what was the name? George, I forget what his name was, the name of the character. He's able to calm everybody from basically pulling their cash out and making the bank go defunct. But the whole business was, I bring in deposits from local depositors. I then lend it out to their neighbors for their house. And this is kind of how you build a housing market. So the S&Ls are really good and big until they weren't.
And they were very conservative, when it came to lending. And then things got consistently more and more aggressive. And that's how we ended up in the crisis that we did in 2007. The savings and loans, we were very conservative. Like I said, it was 20% down. Rates were, at the time, it was 17%, which is, compared to today 6.5 is a great rate. I always look back.
Repeat that.
The rates were
17
to 17.5%. That's what we were.
17.
That's correct.
So this is a discount.
Yeah, this is for me. 6.5 is a great rate, but we were so spoiled for a long time with even 1.9% rates. That's the problem that we have now. Nobody wants to sell. Because where are they going to go? Where are they going to get that cheap money? Free money, basically. Nowhere. So back then it was 17%. And people were happy to give you 20% down, and there was no mortgage insurance, and it was a very conservative approach to lending. And things got aggressively more difficult and dangerous, and we ended up in the housing bump back then. So
of the 80s, right? Of the 80s that led into the 90s, with the Resolution Trust Corporation, when the feds had to seize these S&L, they had to sell off the assets.
Exactly. So I went through the savings and loan. Then I went to a commercial, and I opened the mortgage company for the Kais Company, which is the largest. Michael Pappas, I know you know him. He is the largest family-owned real estate company in South Florida.
And the oldest, the longest running. They're celebrating 100 years. They opened up, Sergio, they opened up February of 1926, a month after the Prince Valdemar. This ship came in, this tall ship tipped over, basically marked the peak of the 1920s Florida land boom. These guys opened up effectively 1 month later. The company is still around, and you know how they made a go of it, according to Michael, based on a podcast that did with them? They pivoted. Instead of hawking land, they basically become distressed asset people. They managed the land, and they also were providing appraisal work. They got into big data before big data was a thing. So they kind of pivoted along the way. So wow, you were working with Michael and Kais. Well done.
They were very visionaries. They saw the solution to our problem before it happened. They will voice the solution before it happens. So that's how they were able to stay afloat, all this stuff. I have a little respect for Michael, for Ted, his father, Tim, his brother. So by working for the company, learned a lot about real estate, dealing with real estate agents. And it's a very unique proposition to do that, because the need of a real estate agent is education, is basically you had to hold their hand and make him believe or assure them this is easy, as long as everything is transparent, as long as you answer your phone, as long as you put together documents the proper way. So it was very interesting. It was very, very interesting, the transition until I got to Union Mortgage. Union, since I work for a savings and loan, a very conservative approach, Union is very conservative as well. I brought all those values into this company. It's like flying a plane. You only have one chance to land. If you do something wrong, if you don't do your pre-flight properly, if you don't check your airplane, you're not going to land. You die. So lending for me is the same thing. You do things, you find out all this stuff from the beginning, so you won't have all the surprises. Because it's, I want one transaction. There's so many people involved here. There's the realtor, the title company, the attorney, the closer, the processor, the appraiser, the inspector, the underwriter. There's so many people involved that for that to work properly, you have to have a pre-application package addressing most of the things. You're always going to have surprises, but most of the stuff you have to do up front. So that has been our success. We take it from A to Z in a way that we voice people's concerns before it happens, people's values, because we know the market. I mean, we're not appraisers, but we know if we look at the market, a contract for $1 million and the values are $750, you're going to have problems. So you have to voice that, let everybody be ready for it.
Yeah, it's not 2005.
No,
those appraisers are like, yeah, don't worry.
Yeah, and you know what happens? The worst thing you can do is not say anything and let the consumer move forward with a deal and start losing money on appraisal inspections and then be blind and not knowing what happened. So our approach is very conservative, just like the savings and loans, just like flying a plane. We want to make sure the consumer is protected. The consumer is number one, obviously. And with that said, the best thing I can do is study the market and give them my own personal opinion of where I see things going. For example, if somebody comes to apply with me today and they tell me, what would you do? I can give them my personal opinion. I will lock whatever it is right now and don't look back. Do not look back, because a lot of people, what they do in my industry is they do not lock loans and they don't let the consumer know. So if the rates go up, you're in deep trouble. So
Sergio, walk us through it. So when you lock it, does that mean what you get like one chance where they give you it's the honor system, or you got to put money up, or how do you lock it? Exactly?
The rate lock is basically free. It's a decision made by the consumer. You have a 15-day lock. That means you guarantee the rate for 15 days. You have a 30-day lock, a 45-day, a 60-day, 75 days. So the longer the lock, the higher the rate. Most people quote the 15, which is a lower rate, and they don't lock it, hoping that the rate, the market goes the other way and they can make more money on the yield spread. But that's a consumer's decision. You can guide them and explain, just like you're asking me, how does it work? Okay, the lock works. And I tell them, in this particular case, the loan is fully approved in our case. Now, we only need to do an inspection and an appraisal and the title. If those three things go well, okay, let's lock for 30 days. Or you can float, but at least 5 days before the closing, you need to lock at whatever the rate is. So if the rate is high, you get the higher rate. If it's lower, you get the lower rate. Because once you lock the loan, we have to deliver that note at that rate with our investors. So, but that's ultimately is the consumer's decision. So by looking at the market, like today, for example, like I said, I would suggest to lock everything that's closing soon.
Okay. And we're gonna get into the details about that, Sergio. But let me just ask you. So if somebody comes to you and they say, "Listen, I'm going to be buying a place in the next 45 days or so," you tell them to lock it. They go ahead and lock it, and let's just say mortgage rates go down. What's the penalty if they say, "You know what? Let me unlock it and then lock it again"? How exactly does that work?
Well, it doesn't work that way. You can only because I have an agreement with my investors, and if I lock a loan, and you can only lock loans if you have a contract.
Okay.
You can now lock a loan if you're going shopping for a property, because it might take you more than 45 days. So once you get the fully executed contract, then that's when you lock the loan. If the rates go down, then you get the higher rate. They have the option to go somewhere else and get a better rate. I mean, that's their option. But we can't. There's a float down. Some investors started to float down the rate, and I think you're going to see with this rates spiking, that they give you an option to float down once. Some of them are going to charge you 1%, some of them 0.5%, and then you have to do the numbers. It's going to cost me this much to float down. Or free. People are desperate for business now because the volume is so low. They might say, okay, we're going to float you down for free once. But once you get there, you have to do it before the closing. But once you get there, you have to do it. If it's higher, it's higher. If it's lower, it's lower. But I mean, it's day by day with this thing right now. People need to understand, and the best thing you can do is educate. That's why I love to meet with clients with buyers face to face, because we go over in detail how the market moves. We show them our systems, and we show them, okay, this is why the rates are high today. And obviously, first-time home buyer is really hard for them to understand because they don't do this every day. But there's a minimum information that can be so clear for somebody, for the consumer to understand. So they go and they Google, okay, what is the 10-year note? And they know that if it's high, that the rates are going higher. At least they have an indication of something. You need to give them something to work with.